Hey everyone, and welcome back. This is going to be a tough video to make. I think a lot of us lost a lot of money. I lost about like 40 years of salary, so that's pretty bad. But I hope everyone is okay, and if we are still in this space, we can definitely make it back as long as we keep trying. And it's very important to learn from our mistakes, so that's why I'm going to go through some of the things that I learned in this video. And as usual, nothing I say is financial advice, and definitely do not put in more than what you are willing to lose. I think that's super important. And for those who are new to the whole situation, just a quick recap. Basically, UST is a stable coin, supposedly a stable coin that is pegged to USD, but it's not backed by any centralized collateral. And LUNA, which is a governance token, is used to mint and burn to create UST and vice versa. So UST is backed by LUNA, but this whole system is backed by trust. And trust is really important because once trust is broken, you might get a bank run, which is basically impossible to get out of for the system to actually survive if there is not enough actual collateral that is uncorrelated to UST and LUNA. Another important thing is Anchor, which offers 19.5% APY for UST deposits, which cause over 70% of all UST in the Terra Luna ecosystem to be locked up in this one single protocol. So in the event of a bank run and all of these UST, they can be freely withdrawn and then sell into a centralized exchange. A lot of this UST can just exit immediately and causing a bank run in just a couple of days. So I won't go into too much details of which version is the right one, but this is like a simpler, simplified version. Basically, UST started a depeg when LFG put funds from the tree pool on Curve, and someone else took this opportunity to dump UST into the pool. So this caused some panic, and then it soon spiraled into a bank run on Anchor, with the UST reserves on Anchor dropping by half in less than 3 days. So on the first day, it was still around 95 cents, or it was at 99.5 cents for a while before dropping to 95 cents, and people were still relatively calm because the price of Luna was still relatively high. But once they attacked UST even further, and then the price of UST dropped all the way to 60 cents, I think trust was really diminished and people started to exit the system. And although it rebounded to 90 plus cents, it never did rebound fully to $1 peg, and the rest was history. LFG also tried to basically send their Bitcoin into a centralized exchange, and then what happened with their BTC was really not transparent, and people are still trying to figure out what exactly went on with the BTC. So now that the dust has more or less settled, people are talking about Terra 2.0, and there are still some changes to the proposal, but it's more or less confirmed that Terra 2.0 will be launching as a fork without UST. And the old chain will be called Terra Classic, and the new chain will be called Terra, with its governance token as Luna. This new Luna governance token will be airdropped across residual UST holders, essential developers, stakers, and holders of Luna Classic, which is the old Luna, or basically the current Luna that you're holding right now, making Terra a fully community-owned chain. So TFL, or Terraform Labs, which is Do Kwon's company, will no longer be owning the majority of Luna, as well as VCs will also not be holding majority of the Luna. So this makes it a much more decentralized chain. Staking rewards will be targeted at 7% per annum, and TFL will not be included in the airdrop specifically. So this is the latest distribution of Terra 2.0. There are ongoing amendments and changes, so this might not be the latest one, but this is the general idea. It will be split between pre-attack Luna holders, pre-attack AUST holders, post-attack Luna holders, and post-attack UST holders, as well as a community pool that will be earmarked for various activities and funds. You can pause this video to take a look at the various details. In terms of my opinion on the various distribution, I think that there is quite a number of unlock at Genesis. So 30% unlock at Genesis is quite a high volume. We probably will see an initial dump of Luna in the first day when it launches. So definitely if you're looking to get your profit, you might want to sell immediately. And I think you can always buy back in, because I think trust is lost and we probably won't be going into a strong rally anyway. So you might as well just sell your tokens at launch on Genesis and then buy them back when it settles onto the ground. And I find it unlikely for it to settle above the initial price. So that's just my own opinion, of course, not financial advice. In terms of the overall distribution, I don't really have much comments. I think it is very difficult to get a completely fair distribution, or what everyone would feel is a fair distribution, because everyone has their own bias. But by and large, I think this is okay. But again, this is not confirmed and the proposal still has a few days left to go. So there is a counter proposal by Fedman on a tiered repayment system where USD holders are refunded one-to-one USDC up to a certain cap per wallet using the LFG funds, favoring small wallets. However, only initial deposits made into Anchor will be eligible for the refund, not the 20% or the 19.5% yield that you get from Anchor, which is pretty fair. All forms of UST on Terra would count in the first refund batch, including USD stake in LPs and pools like Osmosis. And instead of paying out just small wallets, they'll aim to pay out all wallets, including real wallets, up to a set cap per address. So you can follow Fedman on Twitter to get updated on what's happening, as well as the Terra Daily Twitter. I think they are all up to date on latest changes to the proposal that is being discussed right now. And now I want to go through what I've learned so that hopefully people don't make the same mistakes and hopefully I don't make the same mistakes in the future. Basically, you want to avoid echo chambers, which is where everyone is talking about the same thing in a positive light, which is not very good because you want to make sure that you don't ignore the criticisms and you want to make sure that all these attacks on your protocol design, they are realistic, reasonable, and you might want to take them much more seriously moving forward. Secondly, don't marry your bags. Even if you think it's the greatest invention on earth, a lot of things can happen in crypto, especially in crypto. So you always want to make sure that you stay objective. And if something goes south, if you have an initial thesis and you think this thesis is no longer valid, you want to cut your losses and don't think about your sunk costs too much. Just make sure that you don't marry your bags and you want to make sure you treat each investment properly and not get too emotionally attached to it. Thirdly, you want to avoid backholding the token of the main character on Twitter at least. So we have seen how like Andre with his whole phantom narrative and he left and then the whole thing collapsed. And then we have seen Danny and his spell ice time being the talk of the town. And then his token prices also collapsed. And then recently we have seen Do Kwon being the talk of the town and then his token also collapsed. So it seems like there's pretty bad luck if you're like the most popular character on Twitter. So whenever your tokens are being talked about the most on Twitter, you might want to seriously consider taking substantial profits because the upside might be capped if everyone's already talking about it, right? And the downside can be quite a lot because there can be a lot of early investors looking to dump their bags on all the new people that are just finding out about this certain topic or ecosystem. Fourthly, which also links back to the third point, you want to make sure you take profits regularly, especially taking your capital out when you feel like you have already made a lot of money. So I bought Luna, a lot of it at $5, and I think I took out a lot of my money at $50 as well as some on the $100 mark, but I don't think I took out all of my capital. So that is a big lesson. So I did take profits, but I did not take nearly enough profit. So I took profits into UST as well, which I thought was safe, and that's another big lesson. When you're taking profit, it makes sense to actually like properly take profit out into your local currency in your bank, as much as we hate it, because you never know what can happen. And at least if something happens, you have cash in bank, which realistically is still what we need to live on a day-to-day basis. So that's something that we should learn from. And of course, you always want to have some plan to diversify. So you should never put all your bags in one basket. Even if you love that ecosystem and you're an influencer and you basically have all your connections in that ecosystem, you should not put everything into the ecosystem because you never know what can happen. And it's always good to be diversified. But also make sure you diversify properly. You want to make sure you are diversifying across uncorrelated assets. So if you are in crypto, you might not want to have everything in crypto, including all of your layer 1 tokens. All of them might go down if crypto goes down. Or if you're in an ecosystem and then you're diversifying across all the ecosystem tokens, like for example, you're in Luna and then you have Astro, you have Anchor, you have Prism, Kuji. If something happens to the ecosystem, it's all going down. So that's not really the best type of diversification. Of course, if you're starting out, then there's a saying, concentration builds wealth and diversification protects it. So it's okay to concentrate quite heavily when you're starting out with just small capital, like you're just putting in a couple of months of your salary. I think if you are really confident and there is a lot of signs that you know what you're doing and the market is showing that you're correct, it's okay to concentrate. But once you hit a certain amount of wealth that you want to protect or a certain amount of profit that you have earned that you want to protect, then you need to start moving it out and having a proper diversification strategy. And then the last two is more on the macro environment. In November last year, the Federal Reserve has already mentioned their plans to basically cut cut back on the quantitative easing and in fact move into rate hikes. So that's basically the Fed saying that they're going to crash the market indirectly. They're going to make money not free again, and you basically have no idea how bad the market will react to that, but you know it's not going to go up anymore. Or as much. So there's really no reason to fight the Fed, especially when they're taking such a drastic U-turn. You would be much better off just holding cash if you're not sure, and then just waiting for the dust to settle and waiting for the Feds to be more proactive again and going long when they start being more accommodative in their monetary policies. And then money flow is basically just where is the money flowing. So you saw that a lot of billionaires were selling away their stocks. The Feds and Congress were also basically selling it. And if you look at the stablecoin market cap, there was a point where they stopped going up. So that's also another sign that money flow has stopped going into crypto and is actually going out into cash. So that's something that you want to take a look at to determine the overall macro conditions. Right now, I think it's a pretty dangerous period to be overly investing into any crypto assets that are volatile and risky. You're probably better off just dollar cost averaging into Bitcoin, Ethereum if you are a passive investor. If you are a more active trader, you're better off doing either shorting or creating some kind of grid board to trade this volatile range so that you take advantage of the choppiness instead of getting chopped up because of the volatility. So in conclusion, I think there's going to be a lot of pain in the months ahead, but there will be a bottom. Markets don't drop forever. And once things are a bit clearer in terms of where they're heading, I think there will be a time to go back to being very bullish on the markets. But for now, I'll be creating content that is more focused on getting free stuff or taking advantage of the volatility or basically trying to earn money in a downwards market. So you can look forward to those content. Hope you guys found this video useful, and if you did, remember to like and subscribe, and I'll see you guys again soon. Bye!
Baby fish do 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 do, baby fish do 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 do.